Hey guys, what is going on? Welcome back to the channel. Again, want to thank everyone for your support on the channel. All the viewers, all the subscribers, immensely appreciate the support. Today I would like to talk about how to short a stock on the stock market. This has been a comment in the comment threads for some time. This has been a video I've been meaning to do for some time, so I thought I'd go ahead and do it today, doing a dedicated video describing exactly what shorting a stock is, and then also can you short a stock on Robinhood. So shorting a stock is very easy to kind of conceptualize here. If we go to a QQQ here, this is a very good ETF for day and swing trading. On the bottom there, you can see this is tracking a modified market cap weighted index of 100 NASDAQ listed stocks. These are all non-financial stocks. If you go up to the 3-month graph, let's do an example here of how you would short this stock. So let's say you borrowed the stock from your broker. So really shorting means that you borrow a stock, let's say at $170, you would simply sell that off. So the brokerage account would not give you a stock credited to your account. They would simply sell that stock off, 170 per share. So 170 per share would be credited to your account. But now you owe them 1 share or how many shares you borrow of QQQ. What you hope happens is that the price of the stock will start trending down here. At a later point, you will buy the stock back. Let's say it went from 170 to 150. You buy the stock back at 150. So you had $170 credited, you had to spend $150, so you have $20 left over, and then you give that stock back to the broker to complete the trade. So you essentially made $20 per share on that stock. So it's a little bit more complicated with regards to fees, but it's simply holding a stock, making it trend down, or hoping it trends down, and then making a trade when it does trend down. That's how you make money shorting a stock. So you're simply betting on a stock to decrease in value. On the other hand, if the stock increases in value, you have to essentially buy it back at a higher price and you will lose money. So let's say you borrowed a stock, just to make the numbers easy, at 130. The stock did not go down as you had hoped, but it actually goes up. You had to rebuy the stock back at 150 or 160 here. Then you'll essentially lose that money. So you get $130 credited to your account. You would have to buy it back at $150 or so. Let's say $160. So you have to buy it back, give it back to the broker to complete the trade. So you simply lost $30 on this trade. And the other caveat behind this as well is that if any time during this holding period the stock has a dividend payment, you have to pay that stock to the broker, or that dividend to the broker. So let's say there was a $10 dividend payment in the middle here at some point. You would have to pay the broker back that $10 as well as buy the share back and give it back to the broker. So you could lose $30 on the trade, buying at 130, selling off at 160, then also the dividend payment you'd have to pay to the broker. And it also gets more complicated with fees as well. Borrowing a stock is not free, so the entire time you hold the stock, you'd also have to pay a certain percentage to the broker. Other caveat is that not all stocks can be shorted. It really depends on your brokerage account. And the other big risk behind this is that at any point during this holding period, the brokerage account can simply say, hey, I want my stock back. And no matter what the price is, even if it's not advantageous to you, you'd have to you'd have to buy it and then give it back to your broker. So it's a very, very big risk in shorting a stock. But as you can see here, there's a very, very big reward as well, potential. So risk equals reward, and shorting a stock is definitely more risky than traditionally buying a stock, holding it, collecting the dividend, and hoping that it increases in value over time. With QQQ, you can also do leveraged accounts. A leveraging account simply means that the ETF is using funds, capital from a variety of very complex financial derivatives as well as debt to amplify the underlying returns of the index. So, for example, here QQQ was up 5.86%, which is about 3 times what the normal QQQ stock is here. So how do you short on Robinhood? Well, unfortunately, you can't borrow shares from Robinhood. That is not possible right now. But what you can do is use entities like this. For example, ProShares Ultra Short QQQ. The ETF is essentially shorting the stock for you. You can see on the bottom there, this is essentially the same index, only it's inverse now. And this is also leveraged 2x inverse exposure, again, to the same underlying index, the modified market cap weighted index of 100 of the large non-financial issues listed on the NASDAQ. So you can buy this stock, hold it, and then sell it off here, and then that's exactly how you make your money. This is down today because the overall market was up, but if the market was down, this stock would be in exact reverse of the QQQ stocks here. So QQQ, the non-leveraged account, TQQQ, the 3x leveraged account, and this simply here on the bottom again, this is 2x inverse, this is 3x inverse. So you can see this one is down 5.87, while QQQ, the exact opposite, is up 5.86. So there's a little bit of a difference there, but they are essentially identical. It's just that these two here are doing the reverse, the shorting on the stock market. So the only way to get exposure to shorting on Robinhood, at least, is using these inverse ETFs, which can be very, very good. If you anticipate a pullback in the market, you can jump into these, like I said, QQQ, TQQQ, as well as their respective shorting stocks, QID, as well as SQQQ, are very, very good for doing day and swing trading if you are guessing on the price of the market going up or down. Again, this is very, very risky. It's kind of gambling to some respects, especially if you don't know exactly what's happening in the overall market. But if you do believe a stock or the market or a market segment is going to pull back, you can jump into one of these inverse ETFs. I pulled up some for the NASDAQ here, but there are literally ones for every underlying index as well as market segments as well. So there's some very sophisticated products out there for not only the QQQ ones here, the ETFs, but also their inverse ETFs as well. So I hope that helps answer some questions. I know there was quite a few folks on the application here, new viewers to the channel as well, wondering if you can short on Robinhood. Currently, you cannot. You can do some options trading, which currently is not enabled for the smartphone platform. You can do that online. I'll do a video about that maybe in a few weeks or so. But right now, shorting is not able to be done in its traditional sense, but you can definitely jump into these inverse ETFs and short stocks in that matter. So let me know if you guys are using any of these products to do any day or swing trading, trying to guess what the market is going to do. Again, I don't advocate market timing or trying to guess which the market is going to do, whether it's going to be an up day or down day. Let me know if you guys are doing any shorting or day trading with these types of stocks. I've done some day trading and swing trading, short-term swing trades with QQQ as well as TQQ. Very, very risky. They worked very well in a bull market. A bear market, you're going to lose a lot of money. And then if you do think there's a correction or pullback in the market segment, you can use these inverse ETFs, like I said, to also take advantage. You can also do a little bit of hedging as well from some of your longer-term buy and hold stocks as well. But again, like the VIX index, the fear index entities, these are very, very risky. So would not advocate you jumping into these unless you know exactly what you are doing. And again, I am not a market professional. This is simply my opinion only. This is what I've been doing in the portfolio. So please do your due diligence, read up about these stocks and how to do shorting. So not to make the video too long, I guess I'll kind of end it here. Again, if you guys have any questions about this video, other videos, please let me know in the comment threads down below. I've been going through some of the comments, trying to catch up to those, so sorry about the delay. And again, thank you all for all of the suggestions on day trading stocks, swing trading stocks, as well as dividend captures and stocks you're holding in your portfolio. Definitely appreciate that. I'm going to be doing some videos about that as well. User suggested swing trades, dividend capture, as well as buy and hold stocks. So again, not to make the video too long, I'll kind of end it here, and we'll see you guys next time.